Today I'm going to give you a very powerful mechanical entries and setups that you can look at on a daily basis, especially during London and New York Open, and will give you ample of opportunities to trade. So if you're struggling and if you need that edge, do watch this video till the end, and I promise you this will give you an edge that may make you very profitable. What you see on your screens are three 15-minute bearish candles, and we all know that every bearish candle has a trend within it of the lower time frame. So this is your 1 minute coming in like that. You have the wick creation, and then the next candle starts, which starts off with creating the wick of the following candle, which then forms into a downward trend, and then it goes on and on and on and on and on until it comes to the creation of this wick. This wick right here, which then creates another wick for the following candle, and hence the trade continues, right? So this is the entire theory. Now, what happens, and it is important for us to realize this, that within this trend, if I were to look at it, there are two very important zones. Firstly, there is potentially an order block on the top wick of this candle, because that is where you have the buy to sell. There is an order block, and there is potentially a flip zone within this candle, which will obviously be part of the 1 minute trend. Right, so if I have not drawn this properly here, but you get the idea. There is a flip zone within this candle right here. Now, as price is moving up, it creates that wick. At one point it flips bearish, and then at this point in time there is if I were to draw, there is a zone here. Yes, there is a reaction that happens on this part here. Yeah, so if I were to clean this up a little bit, bear with me guys. So if I were to clean this up a little bit, there is a zone here, there is a flip zone over here, and then it continues bearish, right? So when I say that and I look at this zone, this is when I say that there is a flip zone over here, right? So let's extend that out straight away. Now, our task is that we catch this wick, right? This is what we intend to do. Where does this wick, and if I were to make this longer, where does this wick catch a demand or a supply zone, gives us a mechanical entry model so we can catch it and then ride the next candle down. And the reason why London and New York are important is that's when majority of the money is being exchanged across the world, through banks, through investment hedge funds, through retail traders, everywhere. A lot of money is being pumped in during those London and New York opening hours. So how do we catch this wick? And this is where the mechanical entries come in, right? So if I were to look at a trade, and this is a trade that we took on 26th, I believe, 27th, right? Let's look at the 15-minute chart first. There is a massive momentum candle to the downside, right? We understand that it has broken all of these levels, right? The trend is downwards, and it is pretty evident. So if I were to zoom this out, it is pretty evident, that the trend is to the downside. And all we're trying to do is catch the creation of the wick on the next 15-minute candle with the anticipation of trend continuation model. This, my friends, the best way is to have the edge on your side, because you're not fighting against the trend. All you're doing is trying to follow the trend, getting in early enough with your mechanical entry models and riding the edge. So here what happens is that within this bearish 15-minute candle, this is the zone that price came in, creating the wick of the following 15-minute candle, and we caught it. How did we catch it? Is when price is moving up, there are a couple of things that I want to see. I want to see strong liquidity taken, which is a swing high that breaks the low and that gets taken out. You can see very clearly that there was a nice sweep. There was no price closing above this. There was no raid of liquidity. It was a nice sweep with a strong close to the downside, even though it closed bullish. So what we did was we put in a sell stop entry, place the stop loss at the high of the wick, or you can place it to cover the entire zone and let that ride out, right? If you wanted a little bit more confirmation, you wait till the liquidity is taken, and then obviously if the price is supposed to turn bearish, there would be a strong reaction candle, and this bearish candle is what I call a very strong reaction candle, because it broke a number of these lows of the wicks, which essentially creates an order flow change in OFC. And we can put a sell stop entry at the close of this candle in anticipation that the trend would continue. You can place your stop loss at the top of this candle right here, or you can place it to cover the entire zone. Both of these trades would have given you a very nice win. Now let me clean this a little bit for you all. Give me 1 second. Let me clean all of that. Boom. So let's look at another trade that we have here. Oh, let me clean that for you guys. All are gone. So let's look at another trade. This right here. Yeah. So we had that very nice bearish move. We are waiting now. We want to see clear displacement, breaking a bunch of highs and lows, OFC change, and this bullish candle clearly gives me that, right? And I can confirm that this was a downtrend. This high did not create a lower low, got run, and it broke this high as well. So the structure, both swing and internal, has flipped bullish on the 1 minute time frame. So let's look at this trade right here. We highlighted with this red box, and I do this because now I am strictly focused on within this box to look at my mechanical entries. I am not interested anywhere around this. I'm just focusing, laser focused within this box. Does it give me an entry? And it does. Price goes up, goes up, goes up, goes up. This is the first 15-minute candle. Second 15-minute candle, price starts trickling down. Once it starts trickling down, what do I need? I need strong liquidity taken. So this would be the first parameter. This low broke this high, and then it got run, but it was a sharp close below, and it did not give me an entry model. Fair enough. Price keeps trickling down, and now this is more much more convincing. You hit the zone, right here. You hit the zone, and then what happens? It takes down a clear low liquidity. It sweeps the liquidity, and it gives me the reaction candle, right after that, which means it broke. When I say a reaction candle with an OFC change, it broke this high. So price is low, high, low, high, low. And then this high gets taken out, which is an order flow change. On seconds time frame, this would be a structural change, right? And then I put a buy stop entry at the close of this wick with the anticipation that the trend would continue and hoping to get tagged in with the momentum. You could have easily placed your stop loss behind this, or you could have covered the entire zone, up to you. So this is trade number 2. Let's look at other options, and this is a pre-London, right? So I don't recommend trading pre-London, but just to look at some trading opportunities that could have developed. Let's look at this candle right here. So this is a pretty strong candle, right? It closed bearish very strongly. It swept the low of the previous candle right here, and then it went zoom, closing strongly upwards. Now, why would I not trade this? And these type of things happen within London and New York as well. But why would I not trade this? The reason for that is, look at your structure. So this is one leg, right? You had a high that broke the structure to the downside, had a low. And then you tried to push up with this candle, but it never broke and closed above the high of this wick, the previous candle's wick, right? So this is where I'm looking at right now, and this is the wick high of that 15-minute candle. So the structure on 1 minute chart remains bearish. And for me to get involved or get excited about a candle is that structure has to really shift in my direction. It has shifted by breaking this internal 1 minute structure, but that is too small of a structure. I need to see the swing on the 1 minute change. You could have argued the price is falling down, this is the high, this is the low, but I could also argue that the price is falling down, it's stagnant, it's accumulating, it's just raging, and then it goes down. I don't see a clear push to the upside. It's just a bunch of candles smushed together, accumulation, ranging, whatever have you, and then it drops in. Clear separation is this. It's not this, right? And even this wick did not close below this, so it swept. And for me, this is clearly a range and really not a structural, clean structure that I want to trade. Let's look at, so this candle did not break it. Well, this candle did break. Let's see, yeah. Let's see what we have here. So there was definitely a strong low, a low that broke this high and then got swept for sure. It came into a valid demand zone, and we could have placed a trade as a buy stop, and this candle placing it right below this or covering the entire zone here. That would have been a trade. The only reason why I would not have been involved in this trade is because it came really at the last minute of the candle. I get very towards the end of this. If this trade had come over here, I would have been definitely in. Even if it was a loss, I would have been in because there is enough data in my journaling that tells me or plays my edge out on a large sample size. Let's close this. Let's, for the sake of argument and knowledge sharing, let's look at this candle right here. So what is going on in this candle? In this candle, if I look at the 15-minute chart, there is no structural break. I mean, this would have been the low that I would need to see go, but there is no structural break, right? So let's just study this candle. What is 1 minute showing me? 1 minute is showing me that there's a clear push upwards. There was a pullback, okay? If I were to really force my thinking, you could argue that it got broken over here. So it got broke at this candle right here at 10:29. So not even at the start of the new candle. The new candle then got generated, yes, and it started creating this wick. So if you follow these series of candles, this is where it stopped, and this is where the wick generation is happening, right? So it starts pulling up. Now, as it is pulling up, what do I see? I see that there is clear liquidity that was taken right there. So one check mark done. Did it mitigate a valid zone? Yes, it did. So let's call that as such. And this zone is even interesting because it swept the high of the previous candle, a solid supply zone. So I could have entered with my entry models as a stop order at the breakout of the candle close here. Could have placed it right on top of the stop loss, right on top of this candle, or covered the entire zone. Or the next entry could have been that I'm waiting for a strong OFC to happen, and I could have just simply placed a short over here and covering the high of this candle, right? Not this candle right here, but the swing high. And both of these would have given me a nice mechanical edge and mechanical trading setup. So my friends, we went over a number of trades with mechanical entries, and I strongly suggest mechanical entries because it's just that much easier on your mental health, right? There is no subjectivity. You are waiting for literally, did step 1 happen? Did step 2 happen? If step 3 happens, you're entering. And the thing is that 1 or 2 losses or even a series of losses in a row don't amount to nothing. You are wanting to trade this model for the next 10 years, right? If you are constantly sitting at London and New York, or let's say even just London, and let's say just one pair, and you are, for that many 15-minute candles, 8 candles, you have 8 trading opportunities, right? And if you are not having a mechanical setup for entries, then you are really putting yourself at risk on your mental side, on your confidence, because a couple of losses, subjectivity happens, and that's where disaster happens for all strategies and all traders, where it's typically not the strategies that is at fault. Majority of the strategies will give you that winning edge. It's the trader trading that strategy, because we end up in self-doubting ourselves after 1 loss, 2nd loss, 3rd loss. And secondly, we don't have enough data that we have collected, build that belief system in us that I don't care if this is a loss, my data, 100 trades, 200 trades tells me that if I trade this model, it gives me a win. All right, guys, so if you liked this content, if it made any difference in your knowledge, do subscribe to this channel. I keep putting out regular videos to make trading life simple for everybody. All right, guys, take care. Bye now.